What is RBI repo rate? The repo rate is the interest rate at which the Reserve Bank of India lends money to commercial banks for a short-term period, typically 1 to 2 weeks. Repo stands for Repurchase Agreement, which is essentially a short-term collateralized loan. Monetary policy tool. The RBI uses changes in the repo rate to implement its monetary policy. When the RBI lowers the repo rate, it becomes cheaper for banks to borrow money from the central bank, and this encourages banks to borrow more funds. Conversely, when the RBI raises the repo rate, borrowing from the central bank becomes more expensive, leading banks to borrow less. Impact on banks. Commercial banks often need to borrow funds to meet their reserve requirements and manage liquidity. The repo rate directly affects the cost of these short-term borrowings. When the repo rate is lower, banks can borrow at a cheaper rate, which can potentially lead to lower interest rates for borrowers, including businesses and individuals. Conversely, higher repo rates can result in higher borrowing costs for banks, which may lead to higher interest rates for loans. Inflation control. One of the primary objectives of the RBI is to control inflation. By adjusting the repo rate, the central bank can influence the overall level of demand in the economy. Lowering the repo rate stimulates borrowing and spending, which can boost economic growth but also increase inflationary pressures. Conversely, raising the repo rate can slow down economic activity and help control inflation. Economic growth. The repo rate also plays a role in influencing economic growth. Lowering the repo rate can stimulate borrowing and investment, which can contribute to economic expansion. On the other hand, raising the repo rate can act as a brake on economic growth by making borrowing more expensive. Policy announcements. The RBI announces changes to the repo rate during its monetary policy review meetings, which typically occur every 2 months. These announcements are closely watched by financial markets, economists, and businesses, as they provide insights into the central bank's stance on economic conditions and its strategy for managing monetary policy. In summary, the RBI repo rate is a critical tool for the central bank to manage inflation and stimulate or restrain economic growth in India. It has a direct impact on the interest rates in the economy and plays a crucial role in shaping the overall economic environment. The central bank adjusts the repo rate based on its assessment of economic conditions and its policy objectives.